Hello friends, welcome back to our channel Money Market Trade. So today we are looking at a company which could be a beneficiary of the rising API segment in India, and along with this company is into oncology segment. So basically oncology segment is a company or is a branch of medicine that specializes in the treatment and research of cancer. So moving ahead. So today we are going to look at the business segments, the shareholding pattern, the financials, the manufacturing facilities and expansion plans of the company's focus on research and development, the company's focus on new ventures, and the pros and cons of this company. Moving ahead. So the name of the company is Beta Drugs Ltd. The market cap of this company is 2,127 crores. The current price is at 2,212 rupees. The 52-week high of this company is 2,326 rupees, and the 52-week low is 1,060 rupees. The stock is currently trading at a PE of 51.9. It has a book value of 188 rupees. It has a 0% dividend yield. It has a good ROCE, that is return on capital employed, of 32.8%, and it has a good ROE, that is return on equity, of 26%. It currently has a face value of 10 rupees. Moving ahead. So this is the chairman's message that we took out from the annual report of this company. So the company is ranked among the top 10 oncology companies, and many of its key products are ranked among the top 5 in their respective categories. Beta's top priority would be to improve and strengthen our position in the Indian oncology market, expand our presence in Latin America and other developing markets while continuing to focus on improving our backward integration. Beta's strong R&D engine with differentiated offerings includes NDDS and FFTL pipeline, which will help drive growth over many years to come. While the company expects revenues to double in the next 3 years, it does not foresee any major capex for the same period. We expect significant operating leverage to pay out, which will lead to expansion in our operating margins. Now let's study the business segments of this company. So first we have CDMO, that is contract development and manufacturing. So out of the total revenue of this company, 48% came from this segment in financial 24. However, when we compare it with financial 2022, we see a drop from 52% to now it has gone down to 48%. The company collaborates with over 50 pharmaceutical firms, including 20 plus leading names like Glenmark, Torrent Pharma, Reliance Life Sciences, and Cadila Pharmaceuticals. It provides a comprehensive suite of services including research, logistics, quality assurance, and marketing support. Between financial 22 and financial 24, revenue from this segment surged by 46%, driven by the onboarding of new clients and products. In financial 24, the company added 3 new clients and 8 products to its portfolio. Moving ahead. So domestic own brand business. From this segment, the company has a revenue contribution of 29% in financial 24. But however, when we compare it with financial year 2022, we see a drop from 30% to 29% in financial year 24. Specializing in oncology products, the company manufactures injections, which contributes 57%, and oral medications, which contributes 43% of the total revenue, under brands like Canrep, Adcilib, Beden, Adfil, and Casfila OS, with a portfolio of 100 SKUs. Its products are distributed to prominent corporate hospitals and government institutions such as HCG, Artemis, and HLL Lifecare Limited. This segment expanded by 53% between financial 22 and financial 24, fueled by the launch of 7 new products. Moving ahead, we have international business, which contributes 16% of the total revenues in financial 24. And as we can see, when we compare it with financial 22, we have seen a growth from 11% to 16% in financial 24. When we compared the previous 2 segments, that is domestic own brand business and the CDMO business, it is international business where we are seeing a growth from 11% to 16%. The company has a footprint in 46 countries, including Uzbekistan, Nigeria, Kenya, Uganda, Sri Lanka, and Nepal, supported by subsidiaries and sales partners. It has achieved over 250 product registrations in these markets. Between financial 22 and financial 24, this segment grew more than 2.2 times, bolstered by entry into 18 new countries and the addition of 53 product registrations in financial 24. With over 350 registrations in the pipeline, it anticipates approvals by financial 2027. Lastly, we have the active pharmaceutical ingredients segment, which has contributed 7% of the total revenues in financial 24. And then when we compare it with financial 22, we are seeing a flat growth of 7% over the period. Focusing on oncology related APIs, the company developed 10 new API products and filed 6 drug master files in Brazil in financial 24. This segment more than doubled its revenue between financial 22 and financial year 24. So India currently is heavily dependent, the entire world is currently heavily dependent on China for its API ingredients. With this company focusing on API, this company could be a major beneficiary going ahead. Moving ahead, we have the shareholding pattern of this company. So the promoter holding has been increasing continuously, and it has gone up from 66.71% in December 2021 to 66.73% in September 24. The FII holding, which was at 0% in December 2021, has gone up to 1.16% in September 24. The DIS holding, which has been at 0.29%, has been flat at 0.16% in September 24. The public holding, on the other hand, has been continuously going down from 33% in December of 21 to 31.95% in September of 24. Here we have compared the financials, the full year financials of financial year 23 with financial year 24. So for financial year 23, the revenue was 227 crores, which has grown by 30% to 296 crores in financial year 24. The EBIT has seen a growth of 13.21% when compared with financial year 23 and financial year 24. The profit after tax has seen a growth of 16.13%, and the EPS has grown from 31.95 rupees to 37.90 rupees. Moving ahead, we have the financials for the first half of 2024 compared with the first half of 2023. That is from April 24. That is from April 2024 to September 2024 compared with April 2023 and September 2023. So in this, the revenue has grown from 141 crore to 180 crore, and we have seen a growth of 27.66%. The EBIT has grown by 18.18%. The profit after tax has shown a growth of 20%, and the EPS has grown from 20.67 rupees to 25.42 rupees. Moving ahead, we have the company's manufacturing facilities and expansion plans. So currently, when we study the manufacturing facilities of this company, the company operates 2 formulations and 1 API manufacturing facility in India. About 70% of API requirements are manufactured in-house. Next, we have the company's expansion plans. In financial 24, the company launched manufacturing operations at a cytotoxic suspension facility, a pioneering setup across Asia, Africa, and Europe. It has also introduced India's first megastrol acetate suspension under its domestic portfolio. Looking ahead, it plans to roll out 15 new drug delivery system formulations by financial year 27. Moving, we have the company's focus on research and development makes it a company that should be our new outlook. The company's R&D expertise lies in developing novel molecules approaching patent expiration using non-infringing processes, addressing complex chemical challenges and creating innovative formulations. As of financial 2024, it has a pipeline of 23 new products under development. New ventures. The company has ventured into cosmetology market, expanding its customer base to 6,000 and increasing its prescriber network from 700 to 1,100. It has recorded a sales of 1 crore in April financial 24 and is targeting a revenue of 15 crores by financial 25. Plans are underway to set up a dedicated manufacturing facility for this segment by financial 26 with a projected capital expenditure of 30 to 35 crores. Next, we also have strategic focus. For financial 25, the company projects revenue growth of 25 to 30% with EBITDA margins of 24 to 26%. It targets surpassing 450 crores in revenue by financial year 26 and aims to secure a position among the top 5 players in the cytotoxic oncology market. The company is also working to strengthen its presence in Latin America and other emerging markets. Its strategy includes developing brands with annual sales exceeding 10 crore rupees. Here we have the pros and cons of this company. So first we are going to look at the pros. Company has delivered good profit growth of 35.3% CAGR over the last 5 years. Company has a good return on equity track record. 3 years return on equity has been at 28%. However, when we look at the cons, the stock is trading at 12.1 times its book value. Though the company is reporting repeated profits, it is not paying out any dividends. So when we studied the book value, we can clearly see that the stock is valued. So the stock is currently trading at premium valuations, and also the company is not giving out any dividends. With this, we would like to end the video. If you do like the video, then please like, share, and comment. Thank you.